if you genuinely care about your clients and you care about the things that are important to them, you'll be highly incentivized to help them manage their money really well because you have full buy-in to those things that they value. And that's how we view what we do is like, my goodness, yeah, like don't delay getting married. Don't delay, like, you know, you have family, like go do things, make memories. Don't just hoard as much Bitcoin as you can. That way, one day you have X amount, like use it. Your money is a tool and a resource to help you do what's important to you in life. Money is a means of communicating what you value. You should probably communicate that. If you're telling your wife that you value spending time with her, you should have that reflected in the way that you use your money in your calendar. If you tell your kids that they're important to you, like you should probably maybe work a little bit less or find a means of like spending time with them versus just taking extra jobs and gigs and stuff so you can buy a little bit more Bitcoin. Like your money communicates what you value. So make sure it's aligned.
Bitcoin is a currency on the internet.
If you don't trust any other currency, this is where you go.
It's going to outperform everything.
Bitcoin could eventually be worthless.
Every day is a good day to buy Bitcoin.
Bitcoin reached its highest price to date.
Bitcoin hitting a new high. It really has reached escape velocity.
There is no second best.
Who cares about Bitcoin?
It's the only secure database that's ever been invented.
Antisocial.
Bitcoin is the real deal.
Stupid.
Everything is bullish for Bitcoin.
Immoral.
It's going up forever, Laura.
Fix the money, fix the world.
WhiteOak is a registered investment advisor, and the opinions expressed on the show are their own and do not reflect the opinions of Basilic LLC. Joining guests is a CPA, and the opinions expressed on the show are their own and do not reflect the opinions of Trusted CPA or other affiliated firms. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and unless otherwise stated are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendation appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Any statements or opinions are subject to change without notice.
What's up, everyone? Welcome back to Bitcoin for Financial Services Media, the podcast where sound money meets professional services. We explore how to build the financial services industries within the principles, ethos, and values of Bitcoin. Today, we're joined by Jim Crider, founder of Intentional Living, FP. Let's get started. Welcome back, everybody. We are joined by Jim Crider, a friend of the pod, friend of Bitcoin for Financial Services. Jim is the founder of Intentional Living, FP. Welcome to the show, Jim.
Hey, thanks, Wyatt. Appreciate you having me.
Of course, man. We were stoked to have you. Fun fact, you were one of the first folks I talked to when I was thinking about getting Basilic started and off the ground. So I've looked to the likes of you and Morgan and a handful of the other folks, on the Bitcoin Financial Advisor Network, which I'm excited to get into. And I really appreciate you being so gracious with your time and give me some good advice. So why don't you kind of give the audience a background on yourself, what you do, what your firm does?
Yeah. So I'm based in Texas. We have clients across the US. On the personal side of things, I married 13, 14 years, dad of 4 young kids. As you'd mentioned, I own our financial planning firm, Intentional Living. Right now, we're a team of 5. We serve around 150 clients in 20 to 30 states, about half of those being in Texas, other scattered around. We do essentially all things money. And what I like to tell the people we're talking with about who are looking to work with us is our job foundationally is to help you articulate what's important to you in life and then align and use your resources in the most efficient and effective way for that. That's what we do, all the way from just like budgeting and savings rates and spending rates to tax planning and estate planning, and we manage investments and ultimately, again, aligning your values and your resources for that.
Yeah, that's awesome. And where I think I want to start with this, Jim, is I think you have a very unique perspective about bringing Bitcoin up with clients. Why don't you take us through how you approach that?
Yes, so we sort of have 2 types of clients from the Bitcoin perspective. So we do routinely, we'll get a wave of new clients who maybe heard me on a Bitcoin podcast or met me at a Bitcoin conference, and they're coming to us specifically for the stated reason of I've never worked with a financial planner before because I haven't found one who understands Bitcoin, or my existing financial planner ignores Bitcoin or constantly tells me to sell it, and I'm tired of that being brushed off. So I want to go ahead and make the move over to someone who can understand and integrate this with our financial plan. So for those types of clients, it's a stated need of, I like Bitcoin, I understand it, I want to be integrated to our plan. That's one group. Then we have the second group who are normal people who are looking for help with retirement planning or just general financial planning. And they find us online or some, different means, and they're not, Bitcoin's not on the radar at all. And for most of those people, I think Bitcoin would actually scare them off. So I don't talk about Bitcoin on our website, or lead with that in introductory meetings with our clients. And really, we tend to not bring Bitcoin up until they are already a client of ours and we've already demonstrated competency in different financial planning fields to show that, we're not morons who are just chasing a hype type thing, but we understand all these fields of financial planning. And then once we've demonstrated that, we'll bring up Bitcoin within the investment type conversation of actually enacting their financial plan. And that's what that looks like specifically. Again, at that point, we've worked with them for at least a few weeks, if not a few months once we get to this conversation, and hey, let's go ahead and talk through investments today and look at your portfolio, how it's currently constructed versus any changes we would want to make. And before we go there, you should know something about me and largely how we view money as a firm. And I tell them, I and our clients tend to own Bitcoin. And then I just ask what their experience around Bitcoin is. And that leads into this conversation of, deep dialogue on money, history of money, stores of value, history of internet-based money, really trying to establish for them that Bitcoin itself is not some newfangled technology that is a get-rich-quick scheme invented by a millennial or Gen Z kid down in their basement to go buy a Lamborghini, but this is built upon the principles of what sound money is, and really challenging the perception of what money is. I think that's probably one of the more interesting things on this. And that applies to clients, but even a lot of people who work in finance, of challenging what is money. And most people don't step back to ask that question. So that is where we begin with those clients. Again, two sets of clients who come to us because of Bitcoin, people who come to us not even on the radar. And for those types, big conversation, what is money? What's the history of it? Unpacking that, then moving into the history of cryptography and internet-based monies, showing the decades of hard work and ingenuity in this field that led to Satoshi's cracking of digital scarcity and a decentralized ledger system and the genius behind that. And then finally building on, once we've walked through all of these, then we go into, if this is, at that point, there's usually pretty high buy-in of Bitcoin probably makes sense. I should probably own some. So the next logical question is, how much should I own in relation to the rest of my investments? And if I'm going to own some, how do I buy it? And then once I bought it, how do I make sure it's securely held? And what does that even mean? So that was a long explanation. We can dive into any of those pieces you would like in more detail.
Yeah, no, that's great, Jim. I guess a couple questions come to mind for me is, where is there a place that like a bucket you're normally pulling from when you are going to buy? Is it generally you're pulling out of the equity side, the bond side? I know it's client by client, but I'm just curious if you generally see any trends there with what you're pulling from in order to put into Bitcoin. Let's start with that one, because I actually forgot the other question I had. Now let's see if it comes back to me.
Yeah, obviously it depends on the client by client base, and not just the client, but the intended use base. A retiree is going to be invested in one way versus a 25-year-old in a different way. And that's not because they're old versus young. It's because retirees probably going to use that money soon versus a 25-year-old. If it's a retirement account, it's going to use it in several decades. Now, if a 25-year-old is going to use that account to buy a house in 5 years, they're probably going to be invested in the same way or similarly to a retiree. So, so the intended use obviously largely drives the asset allocation strategy. Now, to your question, what part of that asset allocation strategy does Bitcoin hold? I'll start big picture. Generally speaking, I would put that to the equity bucket. Now, with that said, I could argue personally, and then through my experience, is once you understand Bitcoin, and I would venture to say, as make the statement, you'll agree. Once you understand Bitcoin, you probably have a different view on bond holdings than the general financial service spectrum. So we do not, as a firm, at this moment, as a firm, we generally don't hold much, if any, mid or long term like duration bonds. So we don't have this standard 60-40 portfolio. So I guess we could argue then, it's like, well, Jim, if you're reducing your bond holdings in totality, cash and bonds, and if you're not really holding much, if any, long-term or mid-term bonds, is Bitcoin taking the place of bonds? Or is that collateral damage in understanding Bitcoin? Then you don't really trust the bond system. So you've naturally reduced that, maybe increased your cash, but then the Bitcoin itself is, I would like to think of it as it's taking the place of some stocks, or like the equity portfolio, but in understanding global debt, macroeconomics, and money systems, we have also chosen to reduce our bond allocation, primarily mid and long duration bonds. That's a really long way of sort of answering your question.
No, I mean, honestly, it's funny because you kind of sorted that out exactly how I was hoping you would. And it's this distinction of like, do you see Bitcoin in the equity lens, or do you see it in this bond market lens? So no, I think that's very interesting. And I guess the only other,
I view it in the equity lens. With the volatility, the upside potential, the downside movements, all these things, I think it fits way more into the equity lens. But we could argue that it comes to the detriment, in a sense, to the bonds. But I don't think it's because like, hey, we're going to reduce your bond allocation so we can buy more Bitcoin. It's more of like, hey, we have $37 trillion of debt, and the fault lines are starting to show with our global debt system. Maybe we shouldn't trust that as much as we once thought we could. So we're going to opt to not buy so much long duration bonds. And that happens sort of at the same time as adopting Bitcoin. So it could be perceived that Bitcoin is taking the place of that bond holding, but it's not. It just happens to come at the same time.
Your wealth deserves intention. Basilic Financial is a Bitcoin-focused wealth management firm built to help our clients find balance between money and meaning. We integrate sound money strategies across 4 distinct personalized services: financial planning, individual wealth management, retirement services for SMBs, and Bitcoin financial services. Your prosperity, your purpose, intentionally guided at Basilic Financial. Visit our website at basilic.io to schedule a free consultation.
Yeah, I mean, and I guess it probably you get into the conversation about inflation, if I had to guess, and that kind of history of money. But I was curious if you've had any experiences that you could point to where you go down this rabbit hole of, hey, this is what money actually is. And do you ever get any, feedback of, hey, I'm just not interested to learn about that, or they just shut that conversation down altogether? Or do you feel like most of the clients you work with are receptive to get all of that background in order to make better financial investing decisions with you?
You asked me one question, I answered like 4, 3 of those being questions you didn't ask. But I think it helps us get better, like good context to how I approach this. So from I want to have that conversation perspective, all of them do, because it's important. Like we lead with that. Hey, as we talk about investments, you should know this. And we just walk through. And I think that's a welcome conversation. Now, as far as making a decision from that conversation to own Bitcoin, that varies. That can be, hey, I'm not comfortable with this right now. That is an incredibly small sliver of our clients. Right now, off the shoot from the hip, our smallest allocation to Bitcoin as a client is about a 10% holding. And this is someone who took quite a while for them to come to terms with they should probably own some. And this is someone they had a lot of personal bias against it that was built up over decades. So yeah, that's there is there are other clients who in that first conversation of what is money and what is Bitcoin, they're like, all right, I want to buy so much of this thing. So there's a spectrum there. There's also this moving spectrum of adoption and conviction on a personal basis. So the vast majority of the time, we have that conversation, they sit back and they say, wow, it sounds fantastic. I want to integrate this into my financial plan. Now we discuss how and to what capacity. And then some of them, that's the leap. It took place. Then we have other clients. I had someone reach out to me a week ago who we've been working with them for years. They reached out to me a week ago and said, hey, Jim, like I've been listening to a lot more of the podcast and reading the books that you've sent me. And this is starting to make a lot more sense. I'm realizing now what fiat currencies are and what Bitcoin has the opportunity to become. And so this is a continuation from that initial conversation. And generally, once they go down that rabbit hole, they start reaching out to me like, hey, Jim, I historically have owned 90% index funds, 10% Bitcoin. But now that I have continued to pursue, education in these fields, I want to increase my Bitcoin allocation versus my traditional assets.
Well, I'm so happy you brought that up, Jim, because I think it's a very important point. So it's like, okay, I'm building trust with my client, assuming that segment of your bucket that has little to no previous understanding or exposure or background with Bitcoin. You're kind of taking them through the history of money, what an open source protocol is, what a centralized ledger is, how Bitcoin is kind of like the antidote to a lot of these things. Do you have predefined resources you've created to help walk through this conversation? Do you send them to like Jamison Lopp's blog, different YouTube videos or podcasts? Because it's a little bit of a opening up a can of worms conversation. Jordan and I joke, 40 hours of Bitcoin podcasts a week, get your homework in. And so that could, kind of be extra burden on clients. They have busy lives, all that sort of thing. So what kind of materials are you using to help get them to that point?
Yeah, typically I'll just walk them through a quick slideshow. I'll just share my screen with some really goofy pictures of just visuals to help. All right, if we're going to talk about the history of money and things that have been used as forms of money, it's good to see seashells and glass beads and rhinestones. So just walking them through these visual resources as we talk through things that have been used as money. And then maybe a picture of Roma denari or picture of the dollar when the dollar used to say that it could be given in exchange to the Federal Reserve, or a picture of the Gold Confiscation Act that took place. So visualizations, it's not like charts and intense graphs. It's more like, hey, we're just having a conversation. Here's some pictures. Some of it's just like goofy memes, like Bitcoin memes as well. So yeah, it's some comedy relief thrown into a macroeconomic history lesson. From there, I like to point people. There are a few podcasts that I think are great to get people started, and frankly, will probably get you about 99% of the way. So a lot of times I'll point people towards Preston Pysh and Robert Breedlove. I think it was the first conversation that Preston had devoted to Bitcoin. It was Bitcoin? It was the Common Misconceptions, I believe. That was from back in 2020, I want to say. So I sent him that podcast. There's a conversation that I actually recorded with a buddy of mine. His name is Michael Schmid. Schmid's been mining Bitcoin from his home forever. And we walked through what is Bitcoin from a technical side for people like me who don't understand the technical, computational side of Bitcoin. So I just ask them, I come across as playing the idiot so I can help other people understand. But frankly, these are real questions okay, what is a node? What does it mean to mine? What does it mean to solve a block? So they're very simple questions that he addresses in an understandable way. So the Preston Pysh, Robert Breedlove conversation, that outlines what is Bitcoin from a monetary history perspective. It sort of reinforces a lot of our talking points. And then the Michael Schmid conversation with me that hits a lot of the technical stuff that I think is, that can be a stumbling block for people. Okay, it sounds cool as money, but I don't trust it. Why should I trust this thing? And also it just tackles some of those buzzwords. So go through that. There's some great books. I mean, the Bitcoin Standard is great. Actually recently finished reading Gradually Then Suddenly by Parker Lewis. It took me a very long time to read it because it's pretty dense. I don't think I've recommended that to most clients. Yeah, I'm curious to read. I need to dive more into Lynn Alden's Broken Money, but yeah, a lot of good resources out there.
Dude, talk about dense. Broken Money is, I mean, great book. I think very highly of Lynn, but holy smokes, that's been, yeah, I like to think I have quite a bit of understanding and background in this, field, and it is really dense, and it's taken me a long time to get through it. It's like constantly rereading pages and chapters trying to grok it, but she does do a great job.
I've always been the guy to read one book at a time. I just like to read one and finish it and go to the next. But when I was reading Gradually, Then Suddenly, I was just, it was tough to get through. So I was reading like 4 to 5 books at a time. And most nights I would start reading that. And I'd read that for 20 minutes. And then I would have to switch like a tax book in order to let my brain thaw out. Yeah, that's not good when you move to a tax or a niche specific. Like there's another book I just finished this one as well. The Ensemble Practice, a team-based approach to building a superior wealth management firm. That was my, okay, I need to give my brain a break from Gradually Then Suddenly. It's funny. I was reading this on a plane recently. The guy next to me asked what I'm reading. I told him that. He's like, wow, that's the most niche title I've ever heard. This is a great financial planning, like CPA firm, financial planning firm book. It's fantastic if you're looking to build like an ensemble, larger financial planning shop going from single to multiple owners.
Well, I'm happy you brought that up as well. I know you have some interesting insight on that, and you guys are doing some really exciting stuff on the growth front. I do want to put a pin into that for a second and circle back and to Jordan's portfolio sizing question, because it's funny. I would say I have a similar client base of folks that are Bitcoiners, want to work with somebody Bitcoin specific, and then normies. It's funny. I get this question from most folks that aren't my clients about position sizing, getting into Bitcoin. I would like you to share your thoughts on that. And then on the Bitcoin native clients, are you ever having to tone back their allocation where you feel like as a fiduciary they may be getting a little ahead of their skis, or how do you approach the people that are, hardcore into Bitcoin?
Those are the tough ones. I would say our hardest clients, and in most financial planning firms, jokingly and sometimes not jokingly, don't want to work with like engineers and stuff. But really, Bitcoiners can be really tough clients because they're usually really well studied, and maybe they spend a little bit too much time on Twitter. And they can cross over from being founded in like principles of money and things like that to more of whatever. Like Josh Mandel said that Bitcoin's going to be 444,000 by this date. So therefore I don't know, like crazy stuff. It's like, dude, you've been on Twitter too much. So those can be hard clients, is helping people get out of their mindset of Bitcoin's going to go to $1 bajillion next week. And it like a hype fest. So we do have clients, and that's coming from someone like essentially all of my net worth is in Bitcoin and Bitcoin related things. Like that's what I own. My wife and I sold our house to buy more Bitcoin. So we are that in a sense. So some of the clients see me and they feel validated. Like, well, Jim, you're doing it. It's like, yeah, but I have a job as well, or I'm way younger than you are, or our circumstances are just different. And so, yeah, there are times I have to, and that's coming as a Bitcoin maxi standpoint. I have to tell people like, hey, I think that we should decrease your allocation in some capacity. We should own a little bit more cash. Like Bitcoin is insurance against a broken money system. But I mean, the US dollar is insurance against Bitcoin not doing what you hope it does in the next X amount of time. And I want to make sure that you have as much Bitcoin as possible in X amount of years. And sometimes that means that you should own a little bit less and own a little bit more dollars for the time being. So yeah, there's that place. And that, again, that can be really tough because you're not just overcoming logic all the time. You're overcoming these fallacies and a mindset that's stuck on, I read this on Twitter. I don't know. Do you encounter that? Like if you listen to too many Bitcoin podcasts, you can start only seeing the world through this lens, and you step back. It's like, oh, wait a second. Like this is not how the world's operating right now, and that can be dangerous. I don't know. What do y'all see there?
Yeah, I would say I've encountered that situation a couple of times where it's like, hey, I'm diversified. I'm 70% Bitcoin, 30% MicroStrategy, and by the way, I want to retire next year. And it's like, okay, let's talk, sort of thing. So I hear you on that. And I think it's important to talk about too, because, one of the things, Jordan and I want to do with this podcast is help give, other advisors like the tools to have these conversations. Obviously, sometimes you do need to have the uncomfortable ones. I do think Bitcoiners are extremely unique, interesting bunch, specifically with their preferences and communication styles. So I appreciate that. And I mean, tip of the cap, base Jim selling the house to buy more Bitcoin. That's awesome.
Yeah, that was getting the wife on board for that one. We just re-signed our lease. So each year when the lease sign up comes, it's like, all right, are we gonna sell some Bitcoin to go buy a house now? Or do we punt it out a year? So I convinced the wife to punt it yet another year.
Wyatt, I'll have to send you this video. I was cracking up. It was this guy in a very similar mode. Obviously, like very it was a joke, I assume, but this guy was like, we could take $100,000 and go get married, or we could delay the wedding out a year. And he had all these charts and was doing this like full presentation. And his wife's his fiance is just sitting there like, who am I getting myself into with? So that's what I'm picturing, Jim, when you're having the conversations about the house.
Well, it's funny. I can get on board with the house, but maybe you'll agree with me here, Jim, as Christians, like, do not delay getting married. Spend your Bitcoin to get married. That's most important.
Yeah, those are conversations we have a lot. Really, I enjoy that softer side of financial planning way more than I love. I really enjoy the technical side, but I guess the way I could put it and the way I phrase it to our clients is I care about our clients way more than I care about money. The thing is, if you genuinely care about your clients and you care about the things that are important to them, you will be highly incentivized to help them manage their money really well because you have full buy-in to those things that they value. And that's how we view what we do is like, my goodness, yeah, like don't delay getting married. Don't delay, like, you have family, like go do things, make memories. Don't just hoard as much Bitcoin as you can. That way, one day you have X amount, like use it. Your money is a tool and a resource to help you do what's important to you in life. Money is a means of communicating what you value. You should probably communicate that. If you're telling your wife that you value spending time with her, you should have that reflected in the way that you use your money in your calendar. If you tell your kids that they're important to you, like you should probably maybe work a little bit less or find a means of like spending time with them versus just taking extra jobs and gigs and stuff so you can buy a little bit more Bitcoin. Like your money communicates what you value. So make sure it's aligned. That is our primary job as financial planners, is doing that. And then bringing in the technical side really well helps us do those things better. Of course, if you can love people all you want, but if you're bad at your job as a financial planner, you're not going to actually be being able to help them do those things that they value. But there's also the place of like, if you get too caught up on the money, you might find that, like Stephen Covey talks about, climbing a ladder that's leaned up against the wrong wall. Maybe you've accumulated a ton of Bitcoin or a ton of dollars or whatever, but you miss the whole purpose anyways. And that is the biggest part of our job is, okay, what's valuable to you? How do we use your resources to support that purpose? And how do we check in on that to make sure you're not succumbing to maybe jeopardizing your future self, but also not missing out on the things that you say are important to you that you'll never get back. Like for me, I have 4 young kids. I will never get these times back with my kids. I can't say, well, in 15 years, I'll have a lot more money so we can do the trips then. In 15 years, if I neglect my kids now, in 15 years, they're not going to want to hang out with me. So I have to have that balance of investing in my family, but also making sure that I'm able to take care of my family, in 15 years.
That's beautifully said, Jim. And I would say that's one gripe I would have with Bitcoiners and communicating with Bitcoiners and advisory role is I feel like a lot of times the Bitcoin community want to make Bitcoin an idol, which is obviously wrong. They want to like hoard it. And it's really kind of helping them understand that framework you just laid out. It's like, no, this is a tool. We need to use it to increase our standard of living. And that's not a bad thing. I do kind of want to transition from, Jim, the advisor, to Jim, the CEO, because I do think you have some really interesting thoughts on building out not only a wealth management practice, but obviously building a business within the Bitcoin space, and you've shared some of this with the Bitcoin Financial Advisors Network, which I'm super appreciative of. But why don't you just kind of start, and then we'll kind of get in how you're growing your firm, but how you went independent, and then how you made the leap to feel confident to service Bitcoiners with your firm.
I started off at Fidelity Investments, left there after a bit, went to a boutique financial planning shop, was there for just 15 or so months. And it became very clear while I was there that I was pretty opinionated on how I think clients should be served in all capacities, from a relationship perspective, an investment perspective, a depth of other financial planning areas, tax, state, these areas. So I realized at that point, I could keep trying to find a firm that does it in the way that I value and bolt onto them, but I decided rather to go ahead and start my own firm. So I separated from that company in January of 21. And I separated from them midday, went home, gave the wife a hug, went to the bank, and finished getting a few things set up. And I spent the next 2 weeks endlessly working on ADV and all that stuff. And that was 2 weeks before our third kid was due. My wife's a stay-at-home mom. So we went to zero income for me to start this company. So I spent 2 weeks building out ADV and do all these things. Baby came. At that point, I'd submitted the ADV to the state and just waited for a while for that to be verified while we were taking care of a newborn. And then once we got the word back that we were approved, then it was off to the races to build a business. And I didn't bring over a book of clients from an old firm. I don't have a bunch of wealthy friends and family. So it was day one, hey, we don't have any clients and I need to build we have no income. I need to build a business that can provide for our family. So my wife and I gave ourselves around at least about a year of taking no income. Any revenue that came to the business, we would just put back into the company. And then we revisit 1 year later. So it was all right, we can go a year of no income, but at about 12 months from now, we need to be able to start taking some sort of income from this company. So I need to build from day one. I need to bring in clients so I can start paying myself in a year, but I also don't want to just be living. I don't want to build a company that's only for here and now. I need to build something that's a sustainable long-term vision. And I really want to build something that has enterprise value. So also building up a long-term vision of this company. So from day one, that's what I was trying to build is 12 months from now, I got to eat, but 20 years from now, I want this thing to be thriving too. So that's how we started. It's pretty fun to look back. Day one, a lot of the work I did, I would go to a buddy's house. It was a friend of mine. He lived at an RV park on the river, and I had a newborn and 2 young kids, and working from my house could be a burden. So I would go to his place and I would work from a lawn chair with my feet in the river. On occasion, I did that. I'd work from home with crazy kids and trying to build a business. It's been quite an adventure. It's almost been 5 years, which is sort of bizarre. It's gone by really quick. And yeah, where the vision's being built out, it's going to be a long process though.
And Jim, were you already a Bitcoiner? Was this pre-Bitcoin or no?
Yes, I was a Bitcoiner. So March of 2020 is when it became abundantly clear that our money system was broken. Right before the government shutdowns, when we were talking about shutdowns, I was aware of COVID in December, January. So late January, February, it was wow, this is going to really wreck our economy. And then there was speculation the government would step in some capacity. So very quickly, it was all right, that's not how money works. Something's wrong here. I need to figure out, I asked that question. Okay, what is money? And what, from a historical standpoint, if the government can just print it, that doesn't make sense. What's the next best use or form of money? So obviously at that point, I was already familiar with stocks and bonds and pretty familiar with real estate, somewhat familiar with gold, and a little bit familiar with Bitcoin. So I spent a few weeks, early 2020, just learning a lot more about Bitcoin, forming a thesis around stocks, bonds, real estate, Bitcoin, and gold, and then came out the other side fully convinced that I like Bitcoin a lot. I was still at that other financial planning shop. And so that was also a catalyst of starting my own company, was being able to freely talk about Bitcoin to our clients.
If you're a financial professional working with Bitcoin, you know the pain of messy CSVs, broken cost basis, and accounting tools that were never built for this asset. Bitmint fixes that. Bitmint is the Bitcoin native accounting platform built for CPAs, bookkeepers, advisors, miners, and serious Bitcoin investors. You get clean Bitcoin bank statements, reliable cost basis tracking, full reporting, and fiat integration through Plaid. No crypto talk, no workarounds, just proper accounting for the hardest money on earth. Create a free account or book a demo at bitmint.co today. Something that comes to mind for me, and I feel this on my own side. I talk to clients that obviously we don't do any of this kind of planning, but it comes up in the tax conversation sometimes, is you want to start a business. You're sitting on some Bitcoin. There's this tendency for Bitcoiners to hoard their Bitcoin, whether it's, oh, I'm going to delay starting a business, or I'm going to delay that nice vacation, or whatever it is, right? And so I guess, what would you say to a Bitcoiner who is like, hey, I see an opportunity to go build a product or service on top of Bitcoin, but in order to do that, I've actually got to spend, or at least put some of that Bitcoin at risk in order to go build that company. Do you have those conversations with any of your clients ever?
Yeah, I can answer that from two perspectives. One is the qualitative side, I guess. So for me personally, when I started this company, 2 weeks before baby number 3 came, I had some friends like, dude, that's crazy. Just go take another job at a large institution that has good benefits and it's very safe. And yeah, it sounded nice in the sense of like it was safe and comfortable. But personally, I knew that if I did not start this company, when I was 62, I would look back and say, I wonder what would have happened if I would have had the guts to start this thing. And that the fear of regret was far greater than the fear of not succeeding. So there's that. It's like, all right, you want to build this thing. And of course, not everyone should start a business. There's a decent chance your business is going to fail, like statistically. And some businesses just not exist. Like, all right, that's a bad business, whatever. So I'm not saying just because you want to start it, you should. But if it is a good business, and if you have that perspective, like, man, I wonder what if, and I have that regret, don't ignore that. And then, yeah, from the financial side of things as well, like I like Bitcoin. I think that we'll do well over a long period of time, but like, I also think that a personal business can do really well. So owning, or just looking at it from the quantitative side. Okay, if you're going to sell 2 Bitcoin to fund this business, that's going to cost you $200,000. Let's measure, what do you think Bitcoin will be in the next 15 years? If your business does what you think it will do, it's going to cost you today, it's going to cost you $200,000. What do you think the business from an exit standpoint will be valued at in 15 years? Also, if you're taking revenue from the business on an annual basis, that's going to give you a coupon. So what's the total cash on cash return for that $200,000 you invested in your business versus just keeping the Bitcoin? So you can approach it from that perspective, and also the perspective of, again, like, I wonder what if I would have left my job to start that business when I was 37 versus, just sitting there and doing your 9 to 5. I think there's nothing wrong with 9 to 5 either. Just consider these things.
Definitely no. I love that point on opportunity costs. Yeah, as an entrepreneur, or all entrepreneurs here, I think making that investment into starting a business is one of the most rewarding and freeing things you can do. Bitcoiners are really big on being sovereign. It's like, well, start your own business then. That's a pretty good way to be sovereign. I'm curious, Jim. You could take this whatever way you like, but just being a Bitcoiner, starting a business, specifically in the wealth management field, has your interest in Bitcoin, servicing Bitcoiners, affected your business model and how you've been intentional with building out your firm?
To an extent. I mean, obviously, it could impact us just from a client standpoint. Like, again, we have a decent amount of clients who came to us specifically because of our understanding and integration of Bitcoin. So just from the type of clients we serve, I sort of joke around that, like, again, I told you, like, pretty much all of our liquid net worth is in Bitcoin or Bitcoin related investments. So, but at the same time, like the other portion of my net worth is in the equity value of my company that I own. Now, with that said, the more that our company, myself and this company become intertwined with Bitcoin itself, questionably, let's say Bitcoin went to zero and it came out that it was all a huge Ponzi scheme. Probably the reduction of value of trust that people would have in me and our brand as a company would also go down. So even you have some coupling of my company that is non-Bitcoin has been coupled with Bitcoin itself because of how vocal we are about it. So I am aware of that and try to manage that properly, not because I think Bitcoin's going to go to zero, largely because of, again, like I've taken flack from Bitcoiners about not talking about Bitcoin on our financial planning website. And again, that's largely due to, well, like, hey, if your parents or grandparents were looking for retirement help and they logged in and they went on someone's website and it had Bitcoin on their front page, would they hire them? Probably not. Do you want your parents or grandparents to own Bitcoin? Probably. Okay, well then, what's the problem? So that's how we've navigated this.
Yeah, that's awesome. I appreciate you sharing that. I'm curious in your opinions. I know you guys are growing, which is fantastic. I have a ton of respect for your vision and what you want to do with the firm, and I think it's crucially important. We have entrepreneurs like yourself that are building out growing businesses in the Bitcoin professional services, Bitcoin financial services space. When you're looking at hiring talent, how are you kind of evaluating folks? Are you looking for an understanding of Bitcoin and then teaching them traditional finance stuff? Are you looking for an understanding of traditional finance stuff and teaching them Bitcoin?
Man, it's tough. Hiring people in this space, I think the primary thing I look for is someone I can trust. And it's more of a character side of things. I need to know I can trust you, that you're aligned with the vision of what we're building. I need to know that you genuinely will care about our clients. I need to know that you're intellectually curious and intellectually honest, and that you have an IQ that's high enough to be able to actually go and learn and implement these things. That's it. That's going to largely mean that we're going to have to hire outside the space, not because people in the space don't fit those criteria. I guess that's separate. We'll largely have to hire outside of this space, not because of what I just said, but because a lot of people in this space have this can sound really harsh. From what I've witnessed, a lot of people in the financial planning space do not have the intellectual curiosity to explore Bitcoin in a consistent and unbiased manner. And to take someone who will not intellectually, consistently, and honestly evaluate Bitcoin and have them plug into how we manage our investments for our clients and how we view economic and financial and monetary policy would be really tough. So I'm looking for people who are sort of unplugged from that. And maybe that means just outside the system total and they can just learn everything. So yeah, if I can find someone who's good, like a good person who genuinely cares, who is intellectually curious enough, that's the big point. And again, they have the IQ. You can be curious, but an idiot. And yeah, you have a lot of questions that, my kids aren't idiots, but my 4-year-old asks a lot of questions. And I can explain all day. He just won't understand. So he's intellectually curious. He just doesn't have the developed brain power to understand it. So I need to have both those. You can have really smart people who honestly aren't, maybe they're taking some shortcuts that's going to allow them to not lead to the proper conclusions. So I don't want that either. So how do we marry these things? That's a really long way of sort of answering your question. So the people we've hired. So again, started this company, I left the other company January of 21, started this, I think Marchish of 21 is when we got approved. It was just me for quite a bit. And then I brought on, first hire was a guy named Jack. I met Jack playing basketball. He was in college. He interned with me and would then just follow up and say, hey, between classes, what book should I read or what should I learn about? Should I switch my major? These sorts of things. I saw that he actually wanted to learn and had genuine interest in what I did and wanted to learn about it from a business side of things, about how to handle clients better. So he started with me once he graduated college. He was my first hire. He was my assistant, and he's had the displeasure of listening to me talk all day, every day for several years now. It was just Jack and I for a couple of years. And then I brought on Cade. Cade is a CFP who I worked with back in the day at Fidelity. Great guy. He is a Bitcoiner. He fell into the Bitcoin rabbit hole a few years back. We stayed in close contact. And about a year ago today, I think, maybe, Cade joined me as a CFP. And then we've brought on another guy, his name's Bobby. So to help out. So Jack and Bobby right now are doing a similar role. They're going through their CFP curriculum. So we're sort of layering these people on. It's going to get tough though. Like I have other people in my pipeline of, hey, whenever we get to this needed place of hiring, we're going to bring in this next person. And what I'm trying to do is queue people up. Jack, we brought him in with no experience. He'll take notes and listen to conversations and just get integrated to how we view things. And then one day he'll move into this assistant financial planner role, and then it'll lead into a lead planner role in a long time. And then building up from there is largely you're going to have to do things. Now, of course, if you're going to try to jump from small to enterprise somewhat fast, you're going to reach a place that's going to be impossible to build a sustainable company by hiring 21-year-olds who have a 5-year lead time of training. And that's something I'm trying to address right now. So fortunately, I have been on quite a few podcasts that are industry facing as well. So there are times that I'll have tons of people reach out to me about, hey, I'm looking at starting my own firm, or I want to join a firm that I align with better, or whatever. And all these people will talk and like, hey, do you really want to start your own firm, or are you dissatisfied with the firms you can find, but and that's why you think you have to start your own? And whatever. So I have a queue of people from these conversations as well that I could reach out to and see if they want to join forces as well. So that's sort of what I'm trying to do, is slowly build out a team. That's, yeah, again, intellectually curious and honest enough to explore this. Otherwise, yeah, you can have really smart people who are industry experienced who won't do things the way that we do. I mean, you've seen that all the time with CFP forums and stuff, with people who they don't see it similarly. So they'd be great hires. If I was at a normal financial planning firm, they'd be fantastic. But the way we do things here just doesn't jive.
Well, how do you approach the conversation? I mean, and maybe we just make it even more broad. Do you have conversations with a lot of more traditional advisors just generally, and then maybe hone in on if you're talking with any of those folks as, hey, plant the seed of maybe they would want to jump ship at some point in the next 3 to 5 years. I'm just curious how those conversations just go generally, just based on obviously reason why we're starting this podcast and did the in-person event was we just think that the traditional advisor space is in dire need of folks like who is on this call, right? Kind of coming alongside them and teaching them about Bitcoin. But I'm curious the reaction you get and how you might have to explain yourself or how the firm operates with these Bitcoin standards versus the traditional model.
Yeah, that's tough. If I'm part of a few like forums and stuff for financial planners, and talking about Bitcoin in those places is really rough. Like I get a lot of tomatoes thrown at me. But if I can actually have a one-on-one conversation, there's way less tomatoes. And maybe that's because people are less apt to be a jerk when you're actually talking to someone versus posting on social media. Or maybe it's because they're willing to let their guard down and actually have a conversation and be understood and be willing to understand things. Yeah. So to answer your question, I try to engage a lot of financial planners through like the XYPN, the XY Planning Network has a Facebook page for XYPN members to talk about all things financial planning and financial planning company related. I will routinely post about Bitcoin on there. Always a bad response. That is, every once in a while, I'll have someone say, hey, I saw that you posted about Bitcoin. I'm actually curious. I want to learn. And they never say that on the post. I don't know why. It's like, dude, well, chime on there. I'm getting no support here, buddy. They'll reach out to me separately. So then we'll have conversations, and those usually go well. Or I'll have people who are relatively antagonistic about Bitcoin, and we'll sit down and we'll talk and we'll hear each other out, and they leave more open to it. Or I'll have people reach out to me they heard me on a podcast, and they won't know anything about Bitcoin. We'll just talk about business itself, and then I'll bring up Bitcoin and like, oh, well, they've respected what they've heard from me thus far, and that's why they reached out to me initially. So there's going to be some level of trust to be at least willing to hear me out on the Bitcoin side of things.
Yeah, I love some of the stories you and Gerard have shared in Bitcoin Financial Advisor Network about your endeavors into, is it XY or what's it called?
Yeah, the XY Planning Network, XYPN. Yeah, it's rough. I get a lot of hate on there. I'm not a popular guy in the financial planning world.
Well, good on you, Jim. You're carrying the orange flag proudly, and we appreciate that. One of I think, when you're dipping your toe in both these worlds, from the Bitcoin side of things, is this like demonization of traditional finance and traditional financial planning tactics. From the other side of things, there's this demonization of Bitcoin. What kind of so, and if you're just the average advisor, maybe you're interested in Bitcoin, maybe you're a smaller firm that's more likely to embrace Bitcoin. Maybe you're a bigger firm where your compliance team is finally starting to let you talk about Bitcoin. What are some traditional financial planning tactics that you use to apply to Bitcoiners or Bitcoin holdings?
This might not answer your question, but areas that is top of mind, obviously there's going to be asset allocation. There's going to be the behavioral side of things of financial planning. You have, estate planning. Like if you own Bitcoin, how does that work in your estate plan? Should you hold it in a trust? Should it be an irrevocable, revocable? How's that going to impact these things? How's it going to impact your estate tax? How will it impact the capital gains tax for your beneficiaries? All these things. General tax planning, tax loss harvesting, not having the wash sale rule applied to Bitcoin at the moment. These sorts of things. If you own Bitcoin proxy stocks, like, okay, maybe you bought MicroStrategy at 400 and now you have a massive loss to that you can harvest, but you don't want to get out of Bitcoin completely. Like, all right, so now that's integration of like investments, but then also tax planning. So, it crosses all fields, budgeting, savings rates. A lot of Bitcoiners tend to be pretty frugal. So talking through even just like spending rates, saving rates, they usually are pretty good at delaying gratification. A lot of Bitcoiners are right now frugal, but have these long-term visions of grandeur. I think it's getting easier now, but 4 years ago, it was a lot tougher to be a Bitcoin financial planner because Bitcoiners were like, my financial plan is Bitcoin. I don't need you. It's like, dude, that's like saying Vanguard total US stock market is your financial plan. Like, that's really stupid to say. That's not a financial plan, dude. Bitcoin is not a financial plan. It's a tool that can be integrated into a financial plan. It's like literally you say Bitcoin is money and then Bitcoin is your financial plan. That's like saying money is my financial plan. Like, according to your semantics, Bitcoin is money and Bitcoin is my financial plan. Money is my financial plan. Like, dude, get out of here with that. Like, use logic. I hate that stuff. Yeah, so for you, a few years ago, it was that, oh, Bitcoin's my financial plan. So I had that hate coming from me. But then you had like financial planners who were like, dude, you into Bitcoin? Are you an idiot? It's like, there's no one friendly out there. There's like 5 people that would not think I was an idiot. So it's getting a lot more friendly. From the Bitcoiner side of things, I think Bitcoiners are warming up to like, hey, there's actually, maybe you have a whole lot of Bitcoin. It's like, well, dang, now I have estate tax needs. Or people realizing like, oh, there's actually tax planning you can do around this thing. Or again, like, well, I own some Bitcoin, but I also own some Bitcoin ETF and I want to do some stuff around tax wise. Or crud, I've spent Bitcoin over the last few years and I might be in trouble with the IRS. How do I reconcile this? Or I don't know, I like XYZ. So it is starting to be more respected amongst Bitcoiners as well. But for a while, I felt like Rodney Dangerfield getting no respect.
That's great, Jim. I appreciate that because that's what I'm hoping your standard advisor, they don't have to be intimidated about embracing Bitcoin. It's still a lot of the things they already know. It's just applying it to Bitcoin. Like, it doesn't need to be this 300-pound gorilla in the room. It's like, no, you already have a lot of this knowledge. Now you're just applying it to Bitcoin.
This episode is brought to you by Satoshi Pacioli, a full-service accounting and tax firm built for the Bitcoin economy. If you run a Bitcoin business, mine Bitcoin, or invest in it, you need advisors who actually understand how this industry works. Satoshi Pacioli handles bookkeeping, financial reporting, tax compliance, and strategic planning for Bitcoin-focused companies and individuals. They speak the language of Bitcoiners and help you stay compliant while building for the long term. To learn more or book a consultation, visit satoshipacioli.com.
Yeah, I'll regularly get clients who are like, hey, the clients who are like super Bitcoiners, like, hey, I need an estate attorney who's like super Bitcoiner. And it's like, that can help. Or I need a CPA who's like super Bitcoiner, which can help. But it depends on the capacity. Like maybe your CPA or let's say your attorney, like your attorney recognizes the Bitcoin for like estate purposes is like property. All right, well, just don't be an idiot and don't like make sure your attorney understands what Bitcoin is and they can integrate it to your financial plan like any other asset or property. And then also like not disclose like seed phrase is here and like, okay, just don't do those things. But you don't need like a Bitcoin specialty attorney per se. Now there's a place like if you own a lot of Bitcoin and you have something in your life that's like that should apply specifically to a Bitcoiner, then it could make sense. Or obviously having someone who understands Bitcoin that does estate planning is helpful. Maybe they have better connections with or understandings of how multi-sigs can work, or I don't know, these different fields. Like if you're a state attorney, if you have 100% of your net worth in Bitcoin and your net worth is 20 million and your state attorney thinks that Bitcoin is going to go to zero, they're probably not going to see a need for having like an irrevocable trust and these sorts of things. Versus if you have a state attorney who's a Bitcoiner and you have $20 million all in Bitcoin, they're going to be viewing your tax planning and your estate planning needs way differently. So there is that place. Same thing with a CPA perspective. I have clients reach out. It's like, hey, Jim, I need a new CPA. I want someone who is a total Bitcoin maxi XYZ. I just need them to do my books for my business. It's like your business is a truck repair shop. Like that has nothing to do with Bitcoin. It's not necessary. Is it nice? It can be. But is it always necessary? So anyways, going back to ease the listeners who are like, I sort of understand Bitcoin. I sort of like it, but I don't know how to integrate this to my like financial planning or tax planning or estate planning. Like, yes, it is totally different in one sense, but at the same time, like, it's not like we're talking about something that has just the outrageously different tax and estate and investment rules applied to it for some reason. It's not that unusual.
Yeah. One thing I got to ask you before we let you go is, I talk to advisors a lot and they bucket things, they bucket crypto, is this like overarching bucket. I'd just be curious if you're speaking with an advisor that's newer to Bitcoin, but they're still thinking in this framework of Bitcoin is just part of this whole crypto bucket. There's all these crypto plays. How do you explain that, whether you're talking to an advisor or a client?
We would really try to make it a point of that goes back to like how we introduce what Bitcoin is. So history of money, stores of value, history of cryptography and internet-based monies, and then history of Bitcoin specifically. If we've done a good job up front on those things, that should remove that the confusion of Bitcoin is general crypto. Like, okay, if the primary thesis here is to create a decentralized internet-based money that's peer-to-peer and scarce, that has a decentralized ledger, that's the primary theme that we're going for. Tell me again how Ethereum applies to that. Okay, it doesn't. By your own admission, doesn't apply. So why are we talking about this again? So we just try to do a good job of educating like what it is that we're solving for. Yeah, maybe your weird altcoin, the thing it's solving for is the possible quick run up due to hype followed by a drastic pull down because of reality. Just admit that. So we have to foundationally going back to the first principles, like why are we owning this thing? And admit why you want to own this other thing, and let's approach it from that perspective. It's like, oh, well, it's like saying that you want to, this is a bad illustration, but it's like saying that you want to own VTI, Vanguard's total US stock market fund, but you're going to bucket that, like, oh, well, that goes in my penny stocks bucket because it's all stocks. It's like, that doesn't make any sense, dude. So Bitcoin is, obviously it's cryptocurrency, but just to put it into this general bucket of like, oh, I'm going to own this fund that owns Bitcoin and Cardano and 20 other cryptocurrencies to catch this trend. If you do that, you don't understand Bitcoin. Yeah, I do have a couple of clients who do invest some in altcoins, and they view it more like they view it as like sort of scratch offs and they view Bitcoin as their savings, and these things are like gambling, and it's admitted. And if you can at least admit that, then I can give you a pass sometimes. But if you're trying to pretend that they're the same thing, then like, dude, you don't understand it. We got to go further back.
Totally. No, I think that's a great summary here. And, Jim, I'm just curious. So you mentioned, when you started the firm, kind of feels like you're on an island. We've had this kind of robust build out of tools and products over the last couple of years. As a professional operating the Bitcoin wealth management space, I'd love you to just kind of talk on what your experience has been like at the Bitcoin Financial Advisors Network, working with like-minded professionals, and use this really as kind of a way to encourage people that are either heavily involved in the space or people that are thinking about getting involved to engage with other professionals and bounce ideas off each other.
Yeah, it's nice. There's one. It's funny. I'll talk to like prospects who will reach out about maybe working with us. It's like, hey, I really want a financial planner who understands Bitcoin and is also a good CFP. It's like, well, hey, there's like, as far as I'm aware, there's like 7 of us, and I'm friends with all of them, and I would love for you to talk with them. And so it's nice to have people in this space that I know and trust and consider friends, and also value their work. So it's nice to have that. It's good to. We don't want to be it's nice to have people you can go to know that you're not crazy, but also I think that group does a good job of not being an echo chamber. There is a place of challenging, and also just having a think tank. Like there's constantly stuff evolving in the Bitcoin landscape, and having a group of people that view these things through different lenses. Like there's people in there who view a lot more in depth of the compliance or the tax planning side of things, or the technical, like holding Bitcoin, or, hey, I've been looking at Bitcoin mining, all these areas that we can approach and have conversations around, versus just me. I can think through this asset from one perspective. So super helpful, again, from a keeping me sharp on a technical side, from a encouragement, like I don't think I'm crazy, but then also not get sucked in. It's not like a bunch of people who are just like self-congratulating each other and then we walk away feeling better. There is actual challenging and, robust thought put in those conversations. So I really appreciate it.
No, that's awesome. I certainly do too. My last question for you here, Jim, so sitting the seat you do, if you're trying to see, around corners, 20, 30, 40 years in the future, just kind of opine on your thoughts on how you think Bitcoin is going to change or affect wealth management.
Man, from a time perspective, I have no idea. It is interesting to think through all of the impacts on financial planning, if money just kept its value over time, and if we didn't live in an inflationary environment. Let's not even go to the deflationary side that's, Jeff Booth talks about in The Price of Tomorrow. Let's just say a non-inflationary environment, or inflation was only a reflection on increased demand, not because of a increase in the dollars. Okay, that would change a lot of things. Like suddenly, the amount of conversations we have around, hey, Wyatt, I want to buy a house in the next 24 to 36 months. How do I save and or invest in that? That conversation becomes a lot less tricky. You remember trying to have that conversation? Like that was a hard conversation. Remember that back in like 2021? Like the town I live in, the average house increased in price by 30% in 2021. So someone comes to me and says, hey, Jim, I want to buy a house next year. I need to save, like, how do I save for that? It's like, well, goodness. Like, if you just keep it in cash, you just lost 30% of your purchasing power if the house market does what it did again. If you put it in stocks and the stock market drops a lot, well, now you can buy less house as well. If you put it in the bond market and interest rates go up, and we have historical movements of interest rates going up, then what happens? Well, what happens if we just have a sound money? And maybe a lot of people moved to our town from California, so the housing market does have pressure on it, so it increases by 4%, but our population didn't grow by 30% that year. It went up, average house went by 30% because of the increase of dollars. So the implications of having a healthy money on how we view short-term and even long-term, like, okay, I need to spend $100,000 per year from when I retire, and I'm going to retire at 70 and I'm going to live till probably 90. Like, okay, that's 20 years. I will need $2 million, and let's pretend inflation doesn't exist. Like, okay, well, Monte Carlos became a lot simpler, and we're not trying to plug in. I mean, goodness, have you looked at like the default settings for Monte Carlo simulations on these things, like the inflationary rates and stuff? It's scary, all the guesses we're making. So when this will happen, 20, 30 years, 40 years, how this will impact financial planning, I don't know. But where I hope it ends up with having a healthy money and not living in this like roulette of inflation, stagflation, maybe deflation, but not deflation because of like technological advances, but deflation because of like there's zero hope in the world in a sense, then that would drastically change planning. It wouldn't do away with our job, but it would make a lot of things easier and less guessing about what houses are going to do in the next 8 months. That's good. I hope that happens. We shouldn't have to invest to do everything in life.
All right. Well, this has been great, Jim. I don't want to take too much of your time, so I really appreciate you coming on. Maybe just give everyone a quick handoff of, if they wanted to work with you, or maybe even more importantly, if they're listening and they want to come work for you, where can they find you?
You can go to Job Monster or Indeed. I'm just kidding. No, our website, it's Intentional Living FP as in financial planning. So intentionallivingfp.com. Our calendar's on there for 15 minutes. If you have questions about working with us or working for us one day or something like that, more than happy to have a conversation. Or if it's like, hey, Jim, I have 2 questions about XYZ. If I could just have someone to talk through these questions with, that's all I need. Throw a time on there. More than happy to try to address those in the best way I can.
Well, Jim, you're the man. Thank you so much for coming on. We really appreciate it.
Yeah. Thanks, fellas.
We appreciate you joining us. If you want to help build the future of Bitcoin financial services, hit subscribe, leave a review, sign up for a newsletter, and most importantly, share this with someone in your network who's integrating Bitcoin into their practice. The more professionals we reach, the stronger the ecosystem becomes, and our clients are better served. Stay sharp, stay sovereign, keep leading from the front.